You might think the biggest winners of the AI era have to be GPU companies, but Broadcom's latest earnings are changing that view, with AI orders locked in early and customers demanding full compute systems. This is no longer about results, it's about who controls AI infrastructure. Today, we use earnings and data to see Broadcom's real position. Hey everyone, welcome to Deep Dive Stock Earnings. In this video, I want to make one thing clear right up front. Broadcom's earnings aren't about how much money they made this quarter. They're about a real shift in who actually controls computing power in the AI era. If you're just looking for a short-term AI trade, this probably isn't for you. But if you care about where AI infrastructure money flows over the next 2 to 3 years, stick with me because this is about structure, not hype. Let's start with the most basic numbers. Broadcom has just reported its fiscal 2025 fourth quarter earnings. On the surface, this is a report that's almost impossible to fault. Q4 total revenue came in at around $18 billion, up nearly 28% year over year. Non-GAAP EPS was $1.95, clearly above the street's prior consensus of about $1.86. But what really stands out is this: with revenue growth still below 30%, Broadcom's GAAP net profit surged nearly 97% year over year, almost doubling. That set of numbers is already well beyond the range of what you'd call normal growth. And this is where things get important. When revenue is growing under 30%, but net income is nearly doubling, your first reaction shouldn't be excitement. It should be a question. What's actually driving this? If it's not a one-off factor, then it has to be structural operating leverage. And starting with this earnings report, the answer becomes very clear. That leverage is coming almost entirely from AI. Management was very direct on the earnings call. They said the strongest performance this quarter was driven by one thing: AI semiconductors. AI-related revenue grew 74% year over year, reaching nearly $8.02 billion in a single quarter. And this is an important distinction. This isn't AI starting to contribute. AI has already become Broadcom's most important and fastest growing engine. The company's overall growth structure is now being reshaped from the ground up by AI. Strong quarterly numbers alone usually aren't enough to change how the market views a company long term. What really takes this earnings report to another level is the guidance. Because guidance doesn't reflect what already happened. It reflects how customers are allocating real budgets going forward. And in capital spending cycles, that's the signal that matters most. For Q1, Broadcom guided revenue to roughly $19.01 billion, well above the street's expectation of about $18.03 billion. More importantly, management explicitly stated that AI chip sales are expected to grow at a year-over-year doubling pace in Q1. At the same time, the company disclosed that AI-related backlog has reached approximately $73 billion, with deliveries spread over the next 18 months. For comparison, Broadcom's total company backlog is about $160 billion. That means AI is now approaching half of the entire order book. When people see numbers like that, it's easy to assume this is all about processors and raw compute. But if you look at Broadcom that way, you're missing where it's actually positioned. Because the real bottleneck in AI isn't just how fast chips can compute, it's whether entire systems can run reliably, efficiently, and at scale. Broadcom was very clear about this structure. Out of the $73 billion in AI backlog, roughly $20 billion comes from networking and interconnect products, including high-speed switches, DSPs, optical components, and key connectivity. The remaining $50+ billion comes from custom AI processors, or SPAs. This means Broadcom isn't just selling compute, it's controlling the system-level infrastructure that determines whether AI data centers can actually function efficiently. Without this connectivity, even the most powerful chips become extremely expensive paperweights. Because of this positioning, Broadcom is going through a very meaningful role change. The company is no longer satisfied with simply selling components for certain customers. It's now delivering full AI system solutions. When a company takes responsibility for the entire system, what it's really selling is certainty, not performance metrics. And that shift fundamentally changes Broadcom's role inside the AI value chain. Beyond AI hardware, Broadcom's other major pillar is software. In Q4, infrastructure software revenue reached about $6.09 billion, up 19% year over year. More importantly, software backlog has expanded to roughly $73 billion, up significantly from about $49 billion a year ago. For fiscal 2025 as a whole, free cash flow came in at approximately $26.09 billion, up 39% year over year. The company also announced a 10% dividend increase, marking its 15th consecutive year of dividend growth. While continuing its share buyback program, this combination gives Broadcom both high growth and a very strong cash flow foundation. And because Broadcom combines growth upside with cash flow stability, the way the market prices this stock has started to look very different from most pure AI names. Capital here isn't rushing to trade a single quarter. It's focused on validating how durable this long-term logic really is. And the shift in mindset is already showing up in how the stock trades. Recently, Broadcom stock hasn't shown the kind of pre-earnings run-up you often see driven by hype. Instead, it's spent time consolidating at relatively high levels. From a price behavior standpoint, this usually means the market isn't in a hurry to decide direction. It's waiting for confirmation. In other words, price action here isn't being pushed by emotion. It's digesting fundamental changes that are already on the table. This matters a lot. When a stock holds sideways at high levels instead of selling off, it usually means selling pressure is limited. If confidence were breaking down, capital would simply exit. What we're seeing instead is the market giving itself time to reassess the fundamentals and confirm the narrative. After earnings and guidance were confirmed, the stock didn't produce a 1 or 2 day emotional spike. It broke out of its consolidation range in a controlled trend continuation move. Structurally, this is very different from a low-level bounce. It came after high-level consolidation, was supported by fundamental confirmation, and wasn't followed by immediate exhaustion or sharp pullbacks. So when you look at everything together, Broadcom is no longer a company driven by a single cycle. It now sits at the crossroads of AI infrastructure growth and stable cash flow. What really matters isn't next quarter's price moves, but whether AI orders, system-level delivery, and software cash flow can keep delivering. Do you see Broadcom as an AI growth stock or a long-term infrastructure play? Share your view in the comments. This is Deep Dive Stock Earnings. See you next time.